this video, I'll be going over what you could do, what you should do, and what I would be doing during this Meme-ageddon Part 2. I know there's a lot of potential for making money, but there's so much more potential for risk. So here is my stance on this meme push short squeeze issue. So the key three players in this meme push are AMC Entertainment, GameStop, as well as BlackBerry. So just yesterday we had BlackBerry raise over 8%, AMC Entertainment up 18%, and GameStop up a whopping 104%. And this may look like another short squeeze or gamma squeeze. We don't have an insane number of options contracts that outnumber the available shares of either of these stocks. This is more a retail push that is created by just a slight uptick in that ticker symbol that got hugely pushed. The moment anyone saw GameStop go up, they decided, well, it's happening again! And then everyone clicked the buy button. That is essentially what is going on. So there's a lot of volatility and a lot of people who are still holding from when they bought it at $300, or when they bought BlackBerry at $40, or when they bought AMC at $15 to $20. So a lot of these people don't trust the possibility that these are going to skyrocket. And there's no longer pressure to stick it to hedge funds and keep holding, because the hedge funds are playing all sides. There is going to be significant resistance levels at all of the points that people had sold out of their money previously in order to gain back their shares that they have now recently bought back in. As well, there's going to be resistance at the previous buys where people are still holding. This increase in these stocks is not going to be hurting hedge funds significantly, as many of them had bought back into their contracts at these significant lows, especially with AMC. AMC went below its $9 price target for a lot of these contracts, so they were bought back up. Now it is more of a retail push to get that stock to climb up. It's going to be far less drastic and volatile as previously done, simply because it is less motivated by shorts and options. These hedge funds and smart investors with a lot of capital to burn have played all sides of these stocks. They have shorts, they have shares, they have everything that they need in order to profit, whether it goes up or whether it goes down. So please, if you do not understand the market, or if you do not want to risk the money that you have, do not buy into these meme stocks. But what could you do if you're still holding from last time? Well, hold on until you at least get what you bought in for, but make sure you set stop limit sells so then you get your money back as this thing starts going up. If the price is going up all the way up to $150 and you want to make sure that you get that money back, set a stop loss so you can make sure that your money pulls out if it goes below $150. Cancel and readjust these limits as the price goes up, so then you don't have to worry about that price going down. If you do not have shares in these stocks and you want to buy tomorrow, it may be a little bit late, but what you have to do is watch for dips within the market. Make sure you understand how low this stock can go and buy on those dips when you see a decent recovery. I don't recommend buying any of these stocks and chasing this high if it may get cut off tomorrow. The problem with these stocks, as we've seen before, brokerages can cut off the ability to continue buying, and it will cause more panic sells that would cause the stock to go down. This stock going down will be amplified by the fact that most people are not currently shorting this stock. This is something that was played in effect with Lucid Motors, or CCIV, when that merger was brought to light, where this was not a heavily shorted stock that had a possibility of many people being forced to buy in shares. As people started selling off, especially retail investors, once they got their $60 profit, they had that stock moving down, and then anyone who had stop losses set, they automatically got hit, and more were automatically selling than we ever had automatic buys. So then that continued to go down to that $30 price point that it could possibly be at right now. So when you see these downward spikes before market opens, when you see the stock price going down and down and down, don't claim that it's the hedge funds trying to scare you with aftermarket selling. It's legitimately the value of this stock going down. Regardless of how innovative or captivating these stocks are, they are unable to get up to the valuations that they are currently at. When they skyrocket up, there is no chance that these stocks will be able to recover to the evaluation of the company. Regardless of their evaluation or profitable tech or outcome after this pandemic is settled, the current price value is too high. If they go to $100 naturally, or $200, $300 within the next 4 years, just because that has a potential for 4 years does not mean you should be holding onto it right now, trying to chase a price point years in advance. So the best thing you can do is take your money and use it towards opportunities that you can make profit off of in the long term. And right now, it might not be as fast, but it is clearly a lot less risk. But if you do want to chase this dragon, then you should be making sure you buy in before the crucial times of resistance. For GameStop, we had many people buying in at the $300 price point just before and just after it hit $500. And many more buying in at $150 after it started to go down. So these are going to be key resistance points. It is highly unlikely for GameStop to be hitting $500 again. This is going to be a day trader's paradise, as it is understood that this price is going to be extremely volatile, especially now that many investors are very prepared for this. They've been paying attention to forums and they've been understanding the push that was in the works since this GameStop, AMC, and BlackBerry fell through. So if you were buying GameStop tomorrow, I would recommend never buying above $160. If it passes that point, then you're probably too far gone in order to get any money out of it. And I would sell at $200 to $250, as I don't believe it's going to get past a $300 resistance. If you want to chase the $1,000 to $10,000 evaluation that is clearly outside of the realm of reality, then you definitely can, but at least follow a formula that allows you to keep the money you originally invested. If you're not originally a degenerate and you just want to get these profits because, you didn't invest for the meme, you invested because you believe in the company, right? Yeah, that's what we all do. So this formula is broken down in your average cost, which is what you bought the shares for, the shares sold, as well as the total shares and the sell price. So you want to be setting 2 limit sells, and then the rest of your shares you would be holding as asset profit. Whatever shares you have did not cost you anything because you already got your profit out of this. So to simplify the math on this, we are doing 200 shares of AMC at $10. We are buying in with $2,000. Once this gets to twice our evaluation, we want to sell at $20. So we have a limit sell of 25% of our shares. So 50 shares for $20 recovers half of our original investment. For their second limit sell, we want to sell 15% of our shares. So that would be 30 shares of AMC at 3.35 times our original investment. So for $33.50, we are selling 15% of our shares, which is 30 shares. This recovers the last $1,000 that we invested. So now we have 120 shares, or 60% of our original investment, still available. You could sell 50%, you could sell whatever, but you've at least made your money back and a slight profit with the formula that I gave, provided that this stock price 3x'd with this meme push. But Kyle, I subscribe to you for rational thinking. I gotcha. So you don't want to invest in memes. You don't want to be the person who lost money, and you don't want to be the person who falls to all of the I told you so's from people who decided not to invest at all. Because of course, last time there was a huge meme push, a lot of traditional investors took out all of their safety investments and put it into meme pushes. So we still saw a significant drop in the stock market, which we will see again tomorrow and the next day if more people funnel into these meme stocks, because a lot of the people who put brand new money into the market because they wanted to get these meme pushes and then eventually lost money stayed in the stock market so that they could gain back what they had lost. Now these people who had the same mentality going in, buying GME, AMC, and BlackBerry, will be buying in again and selling the traditional investments that they had started, or all of the penny stocks that they're currently betting on, in order to go for this meme push and for finally one more time to stick it to the man. So while these memers make their money, you want to make sure you capitalize on the current successes in your portfolio, and you want to take your profits. If it's 5%, 10%, 20%, take your profits just in case more people reinvest into meme stocks over the next couple days. Take that cash position and hold on tight and wait for the opportunity to come in on the stocks that are going to be elevated by these memers finally taking their profits. Because after they take their profits, they're going to keep on trying to game the stock market with the companies that they are most familiar with, and these memers make money munching marijuana. So of course there's already a lot of research that has been done on Wall Street bets and Bay Street bets on the cannabis industry. That was the next push that they had planned before these stocks started taking off. So once these stocks take off and people take their profits, they will be landing those profits directly into the cannabis sector. So you want to take that and run with it. While these people are making their money off of memes or losing money off of memes, these people who got into memes because of people who get high and talk about memes and make memes about the stock market will be making money off of AMC, GME, and so on. When they get back into the market, they will go into what they are familiar with. Similar to how I say invest in real estate near you so you understand your market. They're going to invest in cannabis because they're familiar with the different strains, providers, and what they believe in most, as well as a lot of these people are actually very smart and understand how to research and push the right companies. And the main companies on that list are Fire, F-I-R-E, Supreme Cannabis, OGI, Organigram Cannabis, High Tide Cannabis, as well as Delta 9 Cannabis. The one with the highest potential for 2x gains would be Fire, as it has a possibility of getting that 80-cent to $1 price range because it has already exercised its warrant buys at 29 cents. It only recently broke the support level of 29.5 cents, and then it immediately came back up and is now dancing between 29 cents and 36 cents. This will be the optimal time to buy at 30 cents or lower. So then eventually once these people push their money back into cannabis, that is going to be very beneficial for our portfolios. Organigram Holdings is staying steady above $4 and will continue to go up. It may dip as low as $4.20, which is obviously a perfect buy-in for a cannabis stock. It will likely go up to its previous highs of $7.67, onward closer to $10. High Tide Cannabis has the strongest online presence when it comes to online retailers with Canna Cabana, Kush Bar, and Famous Brands. And of course, Delta 9 Cannabis is having a conference for its shareholders today and tomorrow. So this is going to give out a lot of insider information. I speculate that they are going to be looking towards expanding into more physical locations, which, who knows, if I attend this meeting, maybe that'll be my next side hustle. So let me know what your plans are for this impending crash and what you're doing with these meme stocks. Are you holding any of them? Let me know and I will comment on your posts and see what I think, or let you know where things are going in my opinion. Link to my Patreon is down below if you want to see more of my opinions and research related to the stock market. Of course, thank you for making it this far in the video. I really appreciate if you would subscribe. I'm getting so close to that $1,000 subscriber. I'm getting so close to 1,000 subscribers. Whew. And all I need to do is post 3 videos a week for the entire year to get that 4,000 hours of watch time. I'll probably be posting more often than that because I really like this workflow of getting those weekly morning videos, but no promises. Let me know what you enjoyed about this video, and I'll get back to you in the comments. Love you guys so far, and I'll probably keep loving this new job that I'm creating for myself. Thank you. Honestly and sincerely, you've made these months some of the best ones this year, which isn't saying much given the year's just started, because it's going to get a lot more better. It's going to get a lot better the longer I hang out with you guys. Can't wait. I also have a Discord that you can join. Yeah.